On Wednesday, global financial markets were in suspense in anticipation of the policy decision from the Federal Open Market Committee. Most experts and investors believe that the policymakers will scale down the pace of rate hikes and raise the fund rate by a modest 25 basis points in an effort to bring inflation down to the annual target rate of 2%. Immediately after the announcement, investors will shift focus towards policy updates by other major central banks, the ECB and the Bank of England. Let's discuss this and other events which will shape market sentiment in the last 2 days of the week in our regular calendar on InstaForex TV channel. The euro and the pound sterling will be in the spotlight, enjoying beyond demand. The thing is that both the Bank of England and the ECB intend to increase interest rates at the same pace and announce rate hikes by 50 basis points. On Thursday, the Monetary Policy Committee of the Bank of England is widely expected to raise the bank rate from 3.50 to 4%, catching up with the US federal funds rate. We should not neglect the difference in economic conditions in the UK and the US. The British economy has already slipped into recession, and the economic downturn could be severe and protracted, judging by the forecast of the UK Central Bank. Still, the monetary authorities give priority to the fight against soaring inflation. In light of the recent macroeconomic data, the state of affairs in the euro area's economy is not as dismal as in the UK. Inflation has slackened notably, and the economy has been able to evade a recession. All in all, the ECB is also going to increase the policy rate by half of a percentage point to 3%. According to the latest remarks by ECB policymakers, it's too early to speak about a moderation in the pace of a monetary tightening. And let's see how the central bank will revise its rhetoric after the policy meeting on Thursday. Nevertheless, there is a fair chance that the euro will assert its strength against the US dollar. Market participants will have an extra source to evaluate the health and outlook for advanced economies. On a Friday, the Market Economics analytical think tank will provide revised PMIs. Preliminary readings came as a pleasant surprise to investors as the business activity in the Eurozone got back on track. As for the US economy, the situation is not so clear-cut. The surveys by Market Economics look a decline in business activity, whereas the Institute for Supply Management is expected to give evidence of a revival in the services sector. The PMI went to expansion zone in January. The most significant report for market sentiment will certainly be the US non-farm payrolls, the government data on employment change in the US public and the private sectors. The overheated conditions in the labor market make an immediate effect on the central bank's rhetoric, forcing the Fed to stick to its hawkish monetary policy. The recent non-farm payrolls showed stronger jobs growth than in the consensus. In the report for January, the US economy is expected to slow down, hiring 293,000 jobs. And let's see whether the forecast will come true this time. And how we're going to be in the short term in financial markets, we will definitely tell you in our next news releases. Don't miss them, subscribe to our channel and stay up to date with us. See you soon!